YouTube! Welcome back to the Investing on a 9 to 5 YouTube channel. If you're new here, I'm your host, the Dividend Dog, guys. Happy Memorial Weekend to you guys out there. Hope you guys are having a safe and fun weekend. It's a rainy day down here in GA, so got a quick video I'm going to put out for you guys. We're going to be going over VICI Properties, ticker VICI, and we'll go over why VICI Properties could be the ultimate REIT investment for your portfolio, as the video is titled, guys. And then we'll explore what they're all about, why it stands out in the REIT space, and so on. So, if you got, like I said, guys, if you guys are new here, don't forget to hit the like and subscribe to the channel. It helps us out and it let us know that you guys are liking the content. So let's go ahead and dive into the video. So I got this snippet here from the last earnings report that Vici wrote out to the stakeholders, and they basically give you guys a little insight before we dive into the company. And they basically were saying that every business should have a clear and compelling answer to the question, what business are you in? So basically, what we ask ourselves when we're looking at a company, as always, you guys have been following the last couple of videos, is that you got to know what the business or what the company, and you have to know what you own and why you own it. Basically, for Vici, they got to know what type of business that they're in, right? So what they do is they invest in own places where people gather for experiences today, aka now, and for decades to come. And these are key things that they are looking to help drive long-term longevity for the company, is by placing or being where places are, people, where they gather a lot for all types of experiences and for decades to come. So 20, 30, 40, 50 years down the line, and so on. So that's one of Vici's main models there. So REIT, what is it, and what is Vici? Vici, they own 93 properties, which is 54 gaming properties here, 39 non-gaming properties. They're a New York-based company. Like I said, they specialize in owning and operating gaming, hospitality, and entertainment properties. They were formed in 2017, which was I think a spinoff from Caesars Entertainment. And lately, Vici has become one of the largest owners of gaming real estate here in America. And you guys know the gaming and gambling, that industry has gone up tremendously, the last 4 years. They own golf courses, have financing partners, entertainment venues, all types of things, right? Where people gather and have all these experiences, right, guys? Like I mentioned, about the gambling, Las Vegas is obviously, you guys know, is becoming the new sports mecca. So if you're a sports fan, guys, you guys should definitely be taking a look at Vici to add to your portfolio, because check out this potential here of the new sports and everything that are coming to Vegas. They already have the Stanley Cup champions there. They got the Raiders. The Athletics are moving from Oakland, down to Vegas. You guys know Formula One is definitely going to be, a new and upcoming thing here in America that's going to grow. They're going to have the first NBA in-season tournament, Final Four. 2024 Super Bowl was there. 2028 NCAA Final Four. You have all these entertainment destinations for all these huge stars that have residencies. I think that's what they call them, at these hotels that essentially Vici owns. As you guys can see, Vegas has huge visitors. 2023, 41 million people showed up there. I mean, it's $1 billion industry for gaming, and Vici is one of the main players in that industry, and they own the Las Vegas Strip. I mean, that's one of the reasons why I like Vici, is because Vegas never sleeps, and everyone is constantly going in and out of Vegas. I've been to Vegas 3 times the last 2 years, and for work and for for fun, and it's consistently busy. I mean, hotels are busy all types of night. I mean, you can wake up at 3 a.m. and you look out the window, you see people walking up and down, the road here. I mean, all these hotels have businesses in them, and it's just consistent cash flow. And this is the new triangle that Vici is setting themselves to be within. So you got that F1 racetrack, you got the T-Mobile Arena, where the Aces also play at too, and the hockey team. We've got the Raiders here. And you got the proposed A stadium's going to go here, where I think old Tropicana was located. That's where they're going to put the new A stadium. And then you got the MGM Grand. These are all consistent flowing assets that Vici is setting themselves up around. And these are some of the properties here that Vici here owns. They own some of the most iconic properties. Let me rephrase that. Such as Caesar's Palace here. We got the Venetian. You got Greektown up in Detroit. These are all areas where I used to. Honestly, Greektown, where shout out to Detroit and Michigan, that's where I'm from. I used to go down this area growing up and had no idea. This is the Chelsea Piers here in New York. They own this real estate part of the pier here, where you can go and do golfing, all types of things inside here. Vichy, once again, cash flow in big area where people are and having experiences. Golf courses, the MGM Grand in Detroit, another area where Vichy has property. So let's take a look at some numbers here. So as you guys can see, the last 5 years, Vici is up 25%. But if we really go probably the last 3 years, Vici is honestly has been flat or on a decline. Closed out here on Friday at $28.48. I have right now 60 shares in it right now with a goal to get 100 shares. Looks like it's totaled up to be $1,700. An average price of 29.43. So I'm essentially down on this, but not by much. I'm not really where I'm not even gonna say not really. I'm not worried about the real estate because I know real estate. These places, as you guys saw in the previous slides, Vegas, and all these other experiences places. These places are open whether we have a good economy, bad economy. People are still gonna find a way to go out and have a good time. We're going to take a little bit more dive in some numbers here. The forward PE trading, quick analysis. Forward PE trading at cheaper than what it is now. We got a 23% target price here at $35 from where it's at now. We got a peg forward. You guys know anything below 1 is worth value. It's at a 1.8. I like where it's at. As you guys can see, last 5 years, 65%. 3 years, 6% the last year, 4% year to date. It's down 9%. Great opportunity here if you're looking to grab, like I said, a cheap stock here that pays a solid and a growing dividend here. Take a nice look at the history. The dividend, once again, has been growing at a rate of 8.63%. They've been paying it consistently for the last 5 years, which has been growing, which is we expect it to continue to do. Provide that stable income here. Another thing too, the durability and the growth of the company. They've raised their dividend every single year while also targeting a 75% AFFO payout ratio, which is after funds from operations payout ratio, and that has been compounding over time. And we're going to go over what is AFFO. Once again, this is the adjusted funds from operation. It wants to highlight here quick 4 bullet points. It provides more accurate reflection of generate cash flow and distribute dividends to us as investors instead of how we look at the earnings per share, not the earnings per share, but the PE ratio that we looked at 10, trading forward, or where it's at now at 11, or some companies, like Amazon or Apple, where we, really have a focus in on PE ratios. Well, with REITs, you really take a look at their AFFO, which to see if the cash flow is growing, and it also lets you know if the dividend has a great sustainability. So a REIT with a higher FFO is more likely to maintain or increase its dividend, which Vici has a great AFFO, which has been growing at a 6% clip per share over the quarter one of 2023. Demonstrating once again strong performance, financial performance for them. So it just helps them give a very accurate of cash flow and dividend sustainability. And long as that's growing, guys, and at a solid clip, that you should expect some good things, for that company. Acquisitions. They've been acquiring companies, for the since 2017, and they've been acquiring more and so on. And these companies it's not a guarantee when you acquire a company that they're going to do well. So when you acquire these companies, they also have to come in and make sure they are performing well to help your bottom line and balance sheet be boosted up as well. And that's all that these companies have done is boosted up their balance sheet, providing sustainable cash flow and dividend growth as well, along with the share price. Profitability. Vici has been profitable the last 5 years, and got great positive operating cash flow. The ROA, ROE, return on invested capital. We got return on equity and return on assets, all in the green here the last 5 years. Great metrics here that we're looking for long-term and sustainable income. Margins, operating margins, profit margins, gross margins, all great. Means VICI knows what they're doing with their money. They know how to make their business grow. As you guys can see, they're mainly out. They own the Las Vegas Strip, and they have casinos all over the United States, but it's mainly Vegas that really helps drive the name for this company. The growth here, earnings per share, revenue growth, everything has been growing. Same with sales, been consistent, which is good. Now they're claiming here, we got to throw a little red flag up, not to mean that the company's performing bad or anything, but we also got to look the good and the bad too. They're saying that the earnings per share growth is decreasing in the next years, could be less than the last few years. The revenue growth rate is decreasing as well. But who knows? With all of these new acquisitions out in Vegas, with the A's being there, F1 coming, all of this is going to help drive, once again, that revenue, which is going to help the earnings per share grow over time. Quick look here. Got a high rating here on Chartmill at 45.15 target price. Got an 83% consensus buy. Right now, once again, it's at 28.60 closing out here on Friday, yesterday. So we got some pretty solid consensus out here for analysis. And, also myself, I think, this company is definitely worth way more than what the stock market is giving the price for. And you guys know how Mr. Market likes to price things the wrong way here in the market. And guys, in conclusion, thank you guys for being here. Don't forget to like and subscribe to the channel. Today we went over VICI Properties and how it offers an attractive opportunity for any of you guys that are looking to maybe add on a different type of stock to your portfolio. If you're looking for some stable income and growth potential, in the REIT sector, if you're not, invested in REITs at all in your portfolio, or if you're just looking to diversify in your portfolio and capitalize on the recovery of the gaming industry when this turns around, guys. I think VICI Property is definitely worth a close look here to add to your portfolio. Let me know in the comments, guys, what you guys think on the video. And once again, guys, you got your boy here, the Dividend Dog. I thank you guys again for being here. Don't forget to like and subscribe to the channel. Thank you. I'm out.